Welcome to another episode of the Power Law Investor. Today is the 8th of March 2025. Bitcoin is trading just around $86,500 and Kaspa is trading around 0.067 dollars, so just above 6 and 7 tenths of a cent. And as a preface, this is just for informational purposes only, it's not financial advice. Today, what we'll be talking about is how our strategy of investing in power law following assets is coming along, following a DCA strategy. I'll be discussing a little bit more about what's happening, in my opinion, with the Kaspa price action that we've been seeing and also in the overall altcoin market, and what I believe is the right mindset to adopt, which is the mindset that I'm adopting going forward. So let's start off by looking at some of the what exactly is a power law and have a quick refresher. When we have basically, if you take the log of the time and the log of the price, you end up with a straight line. That's a power law. And here you can see this for Bitcoin. You see this blue line, which is the price, is bouncing around this trend line, which is the red line, and it's a pretty good trend line. And a measure of that trend line is the R squared value, which the closer it is to 1, the better. And in this case, in 0.96, it's saying about 96% of the variation, the price action, is explained by this trend line. And so, based upon this, if we believe the future is like the past, we can make assessments into what we think the future is going to hold in terms of returns. And so, if we do those math or do that math, which I've done for you guys, we're expecting a return, a Bitcoin price of about $152,000 if we stay on trend in about a year's time. And the expected return is going to be about 77%. Right. And right now, this over here, this is saying it's about 19% below the trend value, which our current value is $86,500. And if we were on trend, we'd be expecting a value of about 108,000. Now, these calculations differ a little bit depending on which data set you use. And if you're following other people, they might have slightly different numbers, but it gives you the general ballpark. And so the idea is if we find power law following assets, we can invest in them with a higher degree of confidence that it's going to produce the kind of returns that we're looking for. So Bitcoin is one power law following asset. The only other one that we have that follows an R squared to a high degree is Kaspa. And this is what the power law model for Kaspa looks like. You can see that it follows along, the price follows along pretty well. The R squared has started to drop down, but lately, since about the middle of September, we've had significant deviations away from this power law trend line. And all of you guys are aware of this, just cutting us into the linear space. Is if it followed the trend line, we would be expecting values, returns of almost 850, 900%, 800% at this time, which is a fantastic return. But really the question becomes is it continuing to follow this trend line? Because we've seen a big deviation down, right? We're at 6.5, about a little below 7 cents. And if we were on track, we'd be expecting prices to be in the 27-cent range. So almost 4 times higher than we are right now. And so the question becomes is, okay, in this sort of situation, do we think the power law still applies? If it still applies, what should be our strategy? If it doesn't apply, what should be our strategy? What's the right way to think about this situation? And so, first of all, let me just go back and sort of give you a description of how we've been doing with these power law following assets so far, right? This is what the spreadsheet looks like. Up to this point, I've developed this triangle algorithm, which basically based on the assessments of, let me show you what this looks like. Basically looks on what the expected return is and between the two assets, Bitcoin and Kaspa and cash, and selects an allocation in a mathematically rigorous way between the two. And as you can see, because the allocation for Kaspa is higher right now because we expect higher returns, but we're also less confident because Kaspa has a lot less price history than Bitcoin. Bitcoin is almost about 15 years of price history. Kaspa, you're looking around 3. And so 3.5 maybe, and you're making an assessment. Okay, I've got 15 years of data showing the trend and 3 years of data in the other. How can I weigh those two out, right? So the algorithm takes all that into account and comes up with an allocation. And based upon that allocation, we've been making investment decisions. And you can see over here it shows the target allocations and they dynamically adjust as the price changes. But if you look at the bottom line over here, we're currently in a loss for the overall portfolio return. We spent the majority of the funds into Kaspa and obviously some into Bitcoin too. And the average price for Bitcoin paid is now about $80,000, and the average price for Kaspa paid is about almost 11 cents, right? And so with the DCA strategy, we invest a fixed amount in every month, which initially started off at being $100. But since about the middle of December, I shifted to around $200 per month, right about here, because I felt that we were going into a sustained time of lower prices, and I want to buy more when the price is lower, right? And so the algorithm helps us make those assessments in a non-emotional, consistent, quantitative way going forward. But at this point, we really have to ask ourselves the question: is it worthwhile following this sort of power law or not? And you'll understand this a little bit more in the context which I'm about to talk right now. But I've just decided to go to a fixed allocation of 60% in Kaspa, 20% in Bitcoin, and 20% to cash. So let me explain this 20% of Bitcoin allocation. Uh, I think there's a lot more reliability in what's happening with Bitcoin, and I think it makes sense. I mean, the algorithm's already giving us values that are pretty close to that, and it just simplifies things considerably for explaining it to people and explaining myself instead of having to dynamically calculate it. Just use a 20%, 60%, 20% split. Now, the 20% cash is for opportunistic buys. For example, here are some decisions that I made on buying in Kaspa whenever this cash reservoir built up. And basically, it's somewhat discretionary, but we find out whenever I think Kaspa is coming down to a price that's particularly attractive, I set a limit order. And if that limit order hits, we go ahead and buy it, right? So right now we've got about $1,280 in cash. And I would probably look to deploy that if Kaspa hit around the 5 to 6 cent mark, right? We're already at $0.67, so about 6.5 cents. I don't think it's unreasonable that we could get lower prices than that also. And I'll explain the logic a little further, right? But I do want to be a buyer, not a seller at these levels. And what I think the important thing to realize is to just get an overall picture of how is the alt market doing, right? So if you look at the alt market, we've sort of been, this is total 3 minus USDT divided by Bitcoin. So it's weighing the altcoin market, extracting out the stable coins, and looking at it as compared to Bitcoin. And if you see that how things are, we've basically been bouncing around this level for quite a while. Since about July 23, we've been bouncing around this, bouncing around this. But we have gotten considerably lower in the past, right? So if you look over here, you hit zero point 0.2 way in February, in January 20, what, January 21, right? And I don't think it's unreasonable that we may see a drop before we see an increase, right? So what I think might be a reasonable way to proceed is that we see the price, this particular ratio drop down here before it takes out. Now, again, I don't know if that's going to happen. We've seen that happen in the past, that we have a drop before we ended up taking off. Um, but it's something that we should be aware of that could happen. And if that happens, the price of Kaspa is likely going to go down further. And if that happens, I want to have funds available to hit it and hit it hard when it drops down even lower, right? So I don't know exactly when that's going to be, and I can't guarantee that because no one can tell you the future. We're just looking at different possible scenarios. And if someone does tell you that they know what the future is going to be like, you should go running because no one knows, right? So this is one situation here that I think is useful for us to be aware of. But I do want to highlight a couple of things that are particularly worrisome about Kaspa. If you look at Kaspa versus the overall market relative to the Bitcoin cap, you find that Kaspa has dropped down considerably. Now, the real drop started in around the middle of September when KRC20 was introduced. But even that seemed to have stabilized for a little while. But since about, you know, February, beginning of February, we've seen a lot of weak action of Kaspa compared to Bitcoin, right? And then if you look at it compared to the overall altcoin market, you can see sort of that same trend, right? The altcoin market as a whole has been bouncing around at those levels, but you're seeing that Kaspa is showing a lot of weakness. And of course, it seems that whatever asset that we own is showing weakness, right? That's kind of how these things go. But that's kind of what we're seeing over here. So in that case, you're seeing Caspa not doing well as the rest of the market. Now, this is the point where you have to start thinking about, is this a value trap or is this a buying opportunity, right? We just look at the Caspa graph over here for the last year. So the narrative generally follows the price. So whatever price action is going on, the narrative will switch to it. Oh, at this point, the narrative was Caspa's doing really well. It's such this awesome crypto. It's got all these decentralized entities. It's going to be the next biggest thing. Great. And then once the price starts going down, you'll see the mood on crypto Twitter or crypto X change quite dramatically, right? And even the different YouTubers and so forth. So this is when it does take, you have sort of two approaches to think about it, or maybe three. The first approach is you just say, hey, I'm not going to do anything. This isn't a good situation. I don't want to sell, but I don't want to buy anymore. Great. I think that's a very valid thing to do. And perhaps that's something that that you feel fits your particular financial situation. So that's option number one. Option number two is to say, hey, the price is going down, so it's a buying opportunity, and I'm going to continue to DCA in the way that I have been doing. And that's the strategy that I have adopted over here, right? So I even increased my DCA and I have cash available because I believe Casper will come back. And I believe it has certain technological features that make it something that's going to have long term excellent returns. Okay. I think we have to be realistic that at this point, if we are looking at the Kaspa chart in terms of the power law, we should have serious reservations whether it comes back to this power law, right? That's just my opinion right now. Other people will have different ways of involving mathematical calculations or even non-mathematical calculations. But my assessment of looking at this chart is saying, look, it definitely was following the power law. So there was something special about this. But right now, it's not following the power law. And so, with that assessment, I also have to think, hey, what is the chance that it's going to come back to follow the power law or not come back to follow the power law? And then a separate level of that assessment happens to be, okay, if it doesn't happen to follow the power law, or even if it does, how do I want to change my investment strategy, or do I want to change my investment strategy? And for me, it just makes a lot more sense to continue DCAing in because the real money is going to be made right and the prices are the lowest. Now, because we can't control and we have no idea how much lower prices will go, and we have a fixed amount of resources, that's dollars to deploy, a fixed amount of dollars every day or every 2 days, every 3 days, whatever happens to be, is in my view the second strategy, right? The third strategy is that you can say is, okay, I'm going to wait until the price starts rising up. I already have enough Caspa here, and I may not buy it at the absolute bottom, but I don't want to be throwing in more money into this, right? I've hit my position limit, and either I've done investing or I'm going to wait until this price starts rising, and then we'll start figuring out, hey, then we'll start putting more resources into it. So those are all three valid ways of looking at the situation, and you have to figure out your own situation, your own financial circumstances, and decide, hey, is this something that I want to do or not? My personal feeling is that I think the altcoin market is going to struggle until quantitative tightening ends. There is a lot of uncertainty right now with what's going on with the Trump tariffs and the different geopolitical shifts that are happening. In that sort of situation, highly speculative assets with a high beta, like altcoins in particular, but even Bitcoin and high beta stocks are going to suffer because there is a lot of uncertainty in the market. People and markets generally like certainty. And so, in that situation, I think it makes sense to be more careful. For me, that strategy involves continuing to DCA in at these levels, which I'm going to do. If we look at this, my average price of Caspa played since we started this project is now about 11 cents, right? Does that mean I'm at a profit? No, I'm at a loss. But very transparently, I think this will be a great buying price in a year's time, and I'll continue to DCA in at these levels. Do I think it could go lower? Yes, I think it could. And that is a hard thing to continue to put money in, but that's what it takes. You're going to have some sort of discomfort either when you buy your asset, either you're going to hold your asset or when you sell your assets. You've got to figure out where that discomfort is going to come in. Buying at lower levels when everyone in the market and every fiber of your being is saying, "Oh, this is awful," is does take a certain amount of emotional discipline, right? But this is where that idea comes from buying when there's blood on the streets. It's not easy. It's not easy, particularly when you already have a position and you're seeing your existing position go down, and you have to figure out, oh my God, am I going to put more into this or not? I have been working on some ways to quantify when are better times to buy in sort of a dynamic way. That's some research that I've been working on, and I'll be presenting that in one of our future upcoming sessions. And I'm excited to share that with you, but it's not completely mature as yet. So I want to spend a little more time getting that sorted out. So there will be better ways that we can estimate how much I should be putting in at what levels. But for now, 90% of the battle or 80% of the battle is probably just DCing in all the time, even when the price is low, particularly when the price is low, because that's when the money is made. So my assessment really is I think that we may see some lower prices. And what I'm likely to do is with this cash available, set some limit orders. Maybe I'll just put that in there as a placeholder around around maybe approximately 5 cents or so, right? I'm just putting that so that you guys can see this transparently. So I'll put a limit order around that price point because we might hit it. So far, each time I look at these limit orders and I set them, I think there's no way we're going to have these prices hit, but we do. And so at one level, this comes down to believing that this is a good project. It has a lot of backing behind it. It makes sense from a technical perspective. It has a lot of social constructs and people around it that are invested in building a community, and that it's actually going to be useful, right? And ultimately, I think that is what you should really ask yourself. And this is why it is important not just to protect me and saying this is for informational purposes, because you have to do your own research, right? That's the only reason why I can have conviction to continue buying at these levels. All right. So thanks very much for your time, and looking forward to keeping in touch. And we'll hit you up later. Please like and subscribe. Cheers.